Welcome back to the newsroom on ET Now, and with this, let's welcome Mr. Vinay Paharia, who is the CIO of PGIM India Mutual Fund. Hi Vinay, very good afternoon. This is Shishti on the other side. Thank you so much for your time. Firstly, Vinay, I wanted to have your understanding on the benchmark indices, because post the Q1 numbers and the kind of numbers that at least Nifty 50 companies have come out with, the consensus view is that Nifty is fairly valued at this price point and maybe factoring in FY26 earnings as well. What's your sense on the market? Because there are many dynamics at play. September onwards, we might see a rate cut in the global markets. It's the election season. Earnings are through. How are you looking at the factors that are play for the markets, and where do you see them headed?
Hi, Srishti. Thanks for having me on your show. Good afternoon to all your viewers as well. So as you rightly said, we also believe markets are clearly running ahead of fundamentals, and clearly we have borrowed returns from the future. And this is more pronounced as you go down the cap curve. It is the least pronounced in large cap companies like parts of Nifty. But as you keep going down the cap curve to mid caps and small caps, clearly the valuation discomfort keeps on increasing. So I think definitely there are pockets of micro bubbles in the small cap and mid cap segment of the market. But having said that, there are some good opportunities for investors looking for a long-term investment. So I think net clearly on the margin, markets seem to be overvalued, especially on the small cap and mid cap side of the market. And also there are certain peculiarities which we've observed on the lower quality and low growth segments of the market. So I think that's what is bothering us.
Thank you so much for highlighting the factors that are bothering you right now. But Vinay, next month onwards, there's expectation that we might enter the rate cut cycle in the US market. So how are you expecting the markets to receive this particular news flow, as well as what could be the likely reaction in the emerging markets, and especially Indian markets as well? What's your sense?
Sure. So I think markets are clearly already discounted a rate cut somewhere in the next 6 months in the US and also probably in India. However, I think what you should also remember is that there is a large quantum of capital which is flowing in from Japan into either India or US or some of the other markets which are considered as risk assets. So the recent increase in the rates by the Bank of Japan is clearly going to lead to some of this capital going back into the home country. And I think that is also a risk which you should counterbalance with the potential rate cut in the US Fed. So yes, some positives, but you need to remember that there are certain negatives also which are already on the horizon.
But at this point in time, when you believe that the markets are decently valued, they have run up ahead of their time, but do you still manage to find opportunities right here, or you are waiting for the right time? Give us a sense there in terms of which sectors are looking attractive to you. Are you weighing more heavy on the defenses right now, or is there any other strategy that you are working on?
Sure. So while we think markets are running ahead of fundamentals, there is a segment of the market which we think is clearly offering a lot of opportunity, and that segment is the high quality and high growth segment of the market. We think that this is a segment which has clearly derated substantially over the last 3 or 4 years. This is a strategy which has delivered substantial returns over the previous 20 years. And we think that there is a lot of theoretical and practical reasons to back this strategy. And hence, we think there is a lot of merit in investing in companies which exhibit high quality growth and high quality returns on equity in their businesses on a sustainable basis. So that's clearly a pocket of the market which we find very attractive across the cap curve, which means large caps, mid caps, and small caps. So we would definitely want to, and in fact, we have significantly positioned ourselves in the high quality and high growth segments of the market, which we think is relatively attractive and potentially can offer relatively better returns for investors in the near future. And in terms of sectors, we think the opportunities lie in sectors like IT sector, the consumer discretionary sector, niche sectors like specialty chemicals, healthcare. So I think these are sectors clearly which potentially also offer value, and a lot of these high quality, high growth companies are concentrated in these sectors.
All right, thank you so much for highlighting the sectors, Vinay. But lastly, if you can help us with your take on all these new age tech companies and any company that still looks good to you, because while I'm asking this question to you and putting this question to you, we have a lot of these new age tech companies, be it PGIM, Zomato, or even the recently listed Ola that are doing well. What's getting the interest back in these, Vinay? Any sense there? And how are you seeing these companies moving ahead as well?
Sure. So, Shrishti, when you look at all of these new age companies, there is a very common thread across all of them. These companies have very limited capital requirements. These companies are growing at a very fast pace. And at the same point of time, they also have very high degree of operating and financial leverage. So while some of them may appear to be loss-making or making limited profits today, investors are clearly looking longer term and extrapolating the current higher growth into the future. And as and when you do that, these companies, some of them may not appear as expensive as they appear today on a very, very naive basis. So some of them clearly offer opportunity. The markets are clearly very smart and hence pricing them accordingly from a futuristic perspective. So yes, some of them offer opportunity, but some of them might be expensive and overvalued.
Since we can't talk stocks with you, but indeed, thank you so much for giving your take on the new age tech companies as well as the sectors that you like at this point in time. Thank you so much, Vinay, for joining us today. Pleasure having you.
Thank you.
But for this, viewers, let's move on. And